Holly, thank you for coming back and having another chat with me.
Hello, my pleasure as always.
So we're going to talk about protection, and it's kind of one of those things that again worries me. Have I got enough in place, or have I got the wrong things in place, and all the what ifs and the scaremongering and stuff. But I know you've got a lot of experience in this area, so can you kind of talk us through what we should be thinking of when we've got our mortgages in place?
Yeah, so this is something that is pretty close to my heart, I have to say, having, seen it very close. And most people have come across people who, have come up against a critical illness of some description, and they've seen the impact that it can have on your life. And I think actually, yes, I have a duty of care as a professional mortgage advisor to explain these things to you. But it's more than that. You have worked your butt off to get what you wanted, your property, your safety net, owning your own home, not having to rent anymore, rely on anybody else, etc. Why would you then not look at the options of protecting that should something happen out of your control?
Yeah.
And I get it. Nobody wants to think or talk about dying, getting cancer, having a heart attack. It's not fun. It's not pleasant. I totally understand that. But it is exceedingly important because we don't give you anything for your money. I can't say, here is what you have earned for the money that you pay each month. That doesn't happen. But what you buy and what you pay for is peace of mind that if something should go wrong, you have a plan B.
Yeah.
So the four main things that we would look at. So home insurance aside, so you have to have buildings insurance on your property.
Yep.
Has to be in place from exchange. We can look at that for you if you like. You can go onto various different websites to look at that. Just make sure you've got your mortgage offer out and everything's done before you start searching on those comparison websites, because a lot of them will credit score you, just as a little extra warning. So come and have a chat with us if you need a hand or to talk more about that. But we're talking personal protection. So looking after you or your family, okay?
Yeah.
So you don't have to have anything in place legally, okay? The mortgage company will always recommend you take out at least life insurance. I will always recommend you take out at least life insurance, okay? Your solicitor will always recommend that you at least take out life insurance. You don't have to do it. You can go on record and we will put notes all over the file to say it is not something that you wanted to look at. That is your prerogative, completely fine. For me, I wouldn't want to go to all that work and all that hassle and all that saving and all that compromise for a lot of people to then potentially leave us open for something else to happen. So life insurance, in my opinion, is like the bare bones. And if that's all you can afford, that is 100% better than nothing. Okay, nothing is not where you want to be in this scenario. Life insurance can be so cheap. For some people, it's a £5 a month.
Do you know what I was going to say to you? Because I don't even know how much it should be. I know it depends on your age and your family circumstances and a whole bunch of other things. But you're saying it can be something that's like a price of a bottle of wine every month.
Any life insurance is better than no life insurance. So life insurance is there if you are to die. So you are no longer here. So some people take the view of, I'm single, what does it matter? They'll get the property, whatever, it makes no difference. And you can look at it like that. Yeah. But if you were in their situation, would you be grateful of 50 grand's worth of money coming in to help pay the mortgage while probate goes through, to help with potentially funeral costs, to help clear up excess bills? Yes, you might well be single, but you might not be single for the rest of your life either. You might meet someone, you might end up having kids, your siblings might have children, you have nieces and nephews that you want to leave that property to. And the earlier you take out any of these insurances, the cheaper they are. The longer you leave it, the older you get, the more the monthly premium is when you start to take them out. So take them out whilst you're young, get a guaranteed insurance premium. So every month you know what you're going to pay, and it might go up a little bit with indexation, but it's not going to go, right, you've now reached 40, we're hiking the prices. It's a guaranteed monthly premium that we would generally recommend. So as a minimum, take out what you can afford. If you can only afford a £5 a month and that gives you £30,000 worth of life insurance, that is better than nothing.
Yes.
100%. What we would generally do is like you can kind of do like a gold, silver, bronze package. We don't necessarily, market it that way, but it kind of gives you an easy way of understanding it. So your bronze would be your life insurance, and we generally cover your mortgage amount. Okay, so that means should anything happen to you, there is enough money in that pot that mortgage is going to be paid off when you're not here.
So that's a lump sum, is it? Is that how that works? It comes out as yeah.
Yeah, lump sum, tax-free, goes straight to the person that you leave it to. If you put it into a trust, then that ring fences it and it keeps it out of your estate. So you don't have to wait for probate to have finished before that life insurance is then acceptable. So you put it into trust. That then means that money will go straight to the person it's intended for, and you need a will. We don't do those, but we know lots of people who do. You need a will to make sure that is all set out really clearly, and those trusts are in place, and that goes straight to your beneficiaries, and they can use that money for the things that they need to use. Because it's, very few people get, you've got X amount of months left to live. Quite often it's that person is no longer there. And as I said, I find it easier to talk about these things 12 years down the line. I understand that the people I'm talking to don't find it easy to talk about these things, but it's having that perspective of going, I can't control that, but I can control the situation that I leave behind. I can control what I leave behind.
Yep.
And that's all you can do. And that's what you pay for, that peace of mind. Yeah. So the life insurance, one lump sum, tax-free, put it into trust. That money is available to pay for those things that potentially somebody is absolutely not expecting to have to pay for. You've got a family, it means the property is paid off, the mortgage payment doesn't need to be found each month. That helps as far as their monthly budgeting goes, because you're going to have gone from 2 incomes down to 1, or maybe 1 income down to none, depending on your family circumstances. And at least, if nothing else, there is a roof above your head.
You've got enough things to worry about, haven't you, at that point in time? You're going to be in a hell of a state, grieving, etc. Plus all the other stuff. I mean, we can cover this on another video. Actually, we're doing one on wills very soon. But it's just again, it's that always about the what if, because the what ifs are, unfortunately, they're not just what ifs. They really do happen. And the state that you are going to be in emotionally is, you just want the practical elements of your life to run as smoothly as possible, don't you?
Yeah, you don't need added stress at that time for whoever it is you're leaving behind, whether that be siblings, whether that be parents, whether that be a partner, children. You don't want, for most people, they don't want that added stress. And for the sake of £5-10 a month, that are you realistically going to miss? Then, for me, that's a no-brainer that you go with that. You don't have to. We're not, there's no condition of the mortgage offer. Nobody can make you take it. Nobody's going to make you feel horrendous if you choose not to. But I'm here to explain what that situation looks like if you do and if you don't. And then it is completely up to you. So we are never, ever going to pressure sale anybody into taking any of the things we're talking about today. There is just no point, because you'll go to all the time and trouble setting it up. And unless you understand what it's for and the monthly payment is affordable, all you'll end up doing is cancelling it down the line.
Yeah.
And then you're left with nothing again. Nothing is the point we do not want to be at, So we'll always say, how much have you got? Realistically, how much can you afford to spend on this? And then we get you the most that we can for that monthly budget. There's no point something being £200 a month if you can't afford £200 a month. We're talking all bells and whistles for £200 a month. We're talking covering every eventuality known to man for £200 a month. It doesn't have to be that. It can be really affordable. So life insurance is the thing that you put in place for other people.
Yep.
Critical illness cover is the next one. And that is always what I say, the slightly more selfish benefit, not in a bad way, but actually you're not dead, you are here. And you potentially are not very well, and do you want to be worrying about money in that situation? So critical illness cover basically covers a set list of specific issues that can arise. Cancer, heart attack, stroke, they kind of three main ones, but there's loads of other things that can be covered depending on what type of policy you want, what kind of premium you want to pay. And we'll go through that with you. We can keep it simple, we can go more in depth, completely up to you. And what critical illness cover does is upon diagnosis of one of those issues, you will get, again, a cash lump sum, tax-free, paid into your bank account for you to do whatever you want to do. So that might be take the rest of the year off work. It might be pay for private medical treatment. You might find out that actually it's not as bad as you thought it was and you overpay it on your mortgage. You might take the kids for a rip-roaring holiday down to Disney in Florida or whatever because they've had a pretty pants time and you totally want to treat them and you've got some money left to do that. Whatever it is that floats your boat, nobody's there to tell you what that money's for. You do what you want to do with it, basically. And it just gives you options. And that is all you can hope for in that scenario. So again, not giving you anything, not saying this is yours, but it means upon that diagnosis, you're not thinking, oh my God, I am going to be poorly and I'm not going to be able to work. How on earth am I going to pay my bills?
Exactly.
That is the last thing you want to be worrying about. The complete last thing. You want to be focusing on getting better, doing whatever you need to do to get better.
Absolutely right.
And being able to focus on that. So again, it's just choices. It gives you options. Nothing I can provide you will cure or solve whatever problem that you have other than giving you choices so you don't have to worry about certain things.
Yeah, but that's huge. I mean, that's absolutely huge right there, isn't it?
Yeah, totally. And the fact that there isn't any caveat as to what you do with that money as well. You know, you can pay for second opinions, you can go to another country and get treatment that isn't available in the UK. You can pay for all those things. Yeah. And again, it doesn't have to be a lot of money. The more money you want to have payout and the longer you want to cover yourself for and the older that you are, the more expensive it's going to be. But again, we look at your budget, we look at how much money how much cover we can get you for that money, and it's all tailored to you so that it suits you and it gives you what you do. So so like the life insurance, we'd normally do at least the mortgage amount. For critical illness cover, we normally do a year's worth of income.
Yep.
So I'm actually kind of standard. So if you did both of those, that's kind of like your silver package, for example.
Yeah.
Then you've got the extra things on top. So next up would be income protection. So this is different to something called ASU, accident, sickness and unemployment. So income protection doesn't cover you for redundancy. Okay. Income protection covers you if you're off poorly long enough for it to kick in. So it has what's called a deferred period. And the longer the deferred period, so the longer you'd wait for that money to kick in if you were poorly and unable to work, then the cheaper it becomes. The shorter the deferred period, the more expensive that monthly payment becomes because it's going to kick in quicker and you're going to be able to claim it quicker. So that will normally pay you between 60 and 80% of your monthly income. And that's a monthly payment. So it's not a lump sum like the others. That is a monthly payment. Okay, so for most people, they'll get some form of sick pay for 3 or 6 months. And what the income protection does is it kicks in once that sick pay stops.
That's one question. Yeah, what is that deferred? What defines the deferred payment terms? Yeah.
So we'd look at what benefits you had with your employer, if you have an employer, or how much savings you have, or how much of those savings would you want to spend in that situation before you had some help kick in and some money come in. And people always go, oh, it's okay, my family would help me, whatever. I understand that, and I've got savings, I get it. How long did it take you to build those savings up? Do you really want to have to go and ask your family for money in that situation? What if they don't have the money anymore? What if they've invested it on something else? What if they've had a tough time recently? Do you want to be relying on other people or savings that will finish and will run out in that situation? Or do you want to have something that you know is going to come and kick in and pay you essentially your wage in that situation?
So what if you own a business, Holly, or you're self-employed? Does that still take effect, or is it only if you are employed?
No, we can do it for self-employed customers as well. We generally do a shorter deferred period for a self-employed customer. Because obviously you don't have the sick pay. Well, you do. You get statutory sick pay, but something like £93 or something ridiculously low. I can't remember what it is exactly these days. Again, I'd look it up, but
not a lot.
But it's not enough to cover all your bills. You'd be lucky if that covers your mortgage in most circumstances.
Exactly.
A month. So absolutely, it's not just for employed people; it's for self-employed people as well. So most people kind of have a backup and a couple of months in their pocket potentially and go, I could cope this long, but actually past that point I don't know what I'd do.
Yeah.
And that's where your income protection comes in.
Perfect.
So that would be like, you know, your gold. Lastly, that you can add on is something called family income benefit. And what that does is that kicks in again once you've died. And what it does is it pays out a monthly figure to your family. So it's almost like an income after you've gone, basically. And that will be set for a period of time. So both of those things, you can make them cheaper or more expensive. So the income protection or the family income benefit, you can make them cheaper or more expensive by tinkering with the different things that you can do with it. So, you know, you can have income protection that lasts until you retire. So if you could never go back to work, get that money until retirement. I mean, that'd be pretty serious, but, you know, that is an option. Most people take out like a 2-year income protection so that you'd be paid for 2 years. And then if you could return to work in that time, then you would do. And then after a certain period of time, you get another 2 years that you could then claim. So if something else happened later on down the line, you can then start a new claim for another 2 years, for example. All the providers will do something slightly different. And again, that is for us to go, this is your circumstances. What do you want to happen? You know, this is what will happen based on what you got now. What do you want to happen? And how can we get there? How can we link the two things?
This might be a really silly question. I'm going to ask it anyway. Are these things for the household or is it per person?
Per person.
Okay.
So you have your own policies. If you were a couple, then you can have it in a plan. So sometimes you might find that because of medical history or whatever, one provider would provide cover for your partner, but they won't provide cover for you, for example, because there might be hereditary issues, there might be things that you've had health-wise that mean that particular company, and they're just like mortgage companies, they have things they're happy to cover and they have things that say that's not for us, thanks anyway. Yeah. And they're all a bit different. So again, that's for us to find you the right one. But you know, we generally would put it all with the same company, because when you have it under a plan, so you have all your policies under a plan, for the two of you, for example, then you generally get a discount because you've got all the policies in the one place. So it's normally cheaper to do it that way. But if we need to split it because one will cover you and one won't, then we split it and we do it like that, and you have two direct debits. But yeah, no, it's something you have personally, and you can do it joint, and then it makes it a bit cheaper. But then you're in the situation that if you did split in the future, then you would have to start those again, potentially. They may not split it for you. And then you might be 10 years older than you were, and that monthly premium then is going to skyrocket, basically. Or we set it up from the beginning as 2 individual plans or 2 individual policies, and then it sticks with you. So if you were to move, split, do something different, whatever, or, you know, it's not one person has claimed and therefore there's no longer a policy left for the person left behind. That's a scenario that can happen as well. So there are loads of things that you need to think about, and cheaper isn't always best, but cheaper always better than nothing.
Yes, true.
For sure. Yeah. So yeah, there's lots and lots of things that you need to take into consideration. And as always, we find out what you guys would need, and then we go, these are the options, what do you think? And we work from there.
And tell me then, I suppose my last question, Holly, is if you said from an affordability point of view, thanks for sorting out my mortgage, I cannot afford anything at the moment or don't want to choose anything at the moment, 6 months later you think, I probably should have done that. Can they come back to you?
Yeah, we get that all the time.
Oh, fine.
It's difficult, isn't it? Especially when you're moving in and you've got a lot going out, and you might need to buy new carpets and new this and new that, and you think, I thought I had everything for a new house. I totally didn't have everything for a new house. And you spent a lot of money. It can be a bit worrying to going, I'm committing myself to even more going out this month. And I do get that. It's a risky business doing it that way. I'm not going to lie to you, because you just don't know when something is going to happen. And I've seen it. I worked in a bank for 8 years, and I have had customers come and sit at my desk and go, I've been diagnosed with breast cancer and I don't know what to do because I'm not sure I can afford to pay my mortgage anymore. And my first question to them is, do you have any type of protection in place? And the one that I will forever remember is this lovely lady came in and she was in exactly that situation. And she said, I just couldn't afford it, Holly. I cancelled it 6 months before my diagnosis.
Oh, God.
And there was nothing that I could do for her. I couldn't magic it back for her. I couldn't advise her to take out something new because the horse had already bolted, and she'd paid for it for years. She'd had a relationship breakdown. She decided it just wasn't affordable and she had to cut it off. And then 6 months later, she's diagnosed with breast cancer.
It just breaks your heart.
Oh, the only thing I could do was extend her mortgage term to try and make it a little bit more affordable for her.
Yeah.
Which is what we did.
Yeah.
You know, but I don't ever want any of my customers to come back to me and say, why didn't you talk to me about this?
I wish I knew.
I wish I knew, because it's too late.
Mm.
And not everybody takes it, you know, and we can have these conversations and people go off and do their own thing. And if you want to do it independently, that's absolutely fine. Just know what you're paying for. Because you might be able to find it £5 a month cheaper than what I'm offering you. But is that £5 saving worth it? Or would you rather have the cover that you know is doing what you want it to do? Or, you know, it's a specialist subject, I guess, is what we're saying. You know,
and it's very emotive as well, isn't it? Very emotive subject. You know, it's all the, you know, it's really quite depressing thinking about it.
I know.
And you've got to be sensible, you know, you've got to be sensible, and all these things are really hard to talk about. I know it for myself, but you know, you've got to have those conversations. Once it's done, it's done. You've talked about it, and then you know.
And that's it. And you know, it is something that we review. So people go out and they might have done it 10 years ago and they've never thought about it since. They make the payment, diligent, make the payment, and I'm going, you've moved twice in that time. Yeah, I know we have. You've got 150 grand more mortgage than you had at that time. So currently, if anything happened to you, your partner has still got to pay 150 grand's worth of mortgage. Oh, that's not what I thought we were doing.
Yeah.
You know, because there's decreasing term, there's level term, there's index. There's so many things. And I don't want to scare you off because that isn't for you guys to worry about. Exactly. That is for me to go, this is what you need and this is why you need it and this is how much it is. Let's go from there. You know, you don't have to understand or know the ins and outs, but you will have a good understanding of what it is you have and what it's going to do for you at the time. But yeah, and I get it. Like as I said to you at the beginning, it's not something people want to talk about, and it is something that people will stick their heads in the sand and go, "Won't happen to me." La 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 la. And I understand, and you know, we're not insensitive about it, but it doesn't all have to be doom and gloom. You know, we can have a bit of a giggle whilst we sort it out, and you know, it's perspective, isn't it? Rather than going, this might happen and it's really scary, like I was talked to once upon a time and absolutely hated, you know, do some disturbance on that customer. No, thank you. That's not the way that I like to do things. Is actually going, okay, this can happen and it's really dreadful, but actually I can make it better with this, and focusing on the I can make it better rather than this is awful.
Yeah. See, there we go, Auntie Holly.
Auntie Holly. I might rebrand, you know that?
Yeah, I would.
The mortgage agony aunt instead. I think that's got a ring to it, you know. I'm not entirely sure if my business partners will be on board with that, but it's something to think about, baby.
I agree. Oh, thank you as always for everything. And we've got all the details down below, so anyone can get hold of Holly through me. Obviously, if you have gone through to Holly, then just say you watch this video, and we can make sure that between us, we jointly look after you with whatever your needs are. So. Thank you very much.
One very quick thing. We don't charge anything to set up protection either. It is all completely free.
Oh God, that's even better. I mean, that is just a no-brainer, isn't it?
I can't believe I nearly forgot. It's like one of the most important things, isn't it? We don't ever charge for our advice to set up life insurance, critical illness cover, income protection, or family income benefit. We're just here to help.
Beautiful. Thank you.
I'm done now.
See you soon.
Cheers, Lucy.
Take care. Bye.